Starting from the back end of this year, the last quarter, let's call it kind of November, December period, it's an enormous amount for the markets to digest. And the only way of doing it is this.
Today, we have Real Vision CEO Raoul Pal giving us his updated prediction for crypto, why the coming cycle will be different, and what we can expect from the coming bull market that could explode in the last quarter of 2023. With crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. In a new interview with Crypto Banter, the former Goldman Sachs executive explains why this year, more than ever, we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the latest interview with Raoul Pal, as he gives his latest updated prediction for crypto and where we're headed in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
No, I'm bullish. I'm bullish. I've been bullish for a while, and it hasn't changed.
And you said, I just wish we could get August and September out of the way. Walk me through the thesis. Why are you so bullish?
So my thesis has not changed for a while, which was that the recession everybody is expecting is probably playing out, but it was priced in last year. Right, the markets don't go down 75% in crypto without it pricing in the economic cycle. The equity markets fell 30, 35%. Long end of tech fell 70%. So we had it priced in last year. So then the market starts pricing in So liquidity started picking up in June of last year. And that's when I started adding to my ETH bets into that big sell-off in ETH, where ETH made its low. Then the confirmation of my forward-looking indicators was that October was another liquidity event where liquidity was rising, but the markets was having its last spasm. So again, I kind of added into that bet, added technology names as well, and was adding all the way through. So for me, looking forwards, we're now getting the bits that I've been waiting for. You see, I live in the future. I'm used forward-looking indicators. So they're looking at things in advance, the economic data in advance, kind of a glimpse into the future. But now that data's catching up, which is inflation is going down. Unemployment is slowly rising. The economy is slowing down. And that means the Fed soon stop raising rates. It means that eventually they cut rates, and eventually maybe they use quantitative easing. We're also going into an election year. An election year tends to have stimulus because they want to get elected, so they bribe everybody with money. So we've got this kind of nexus of stimulus that's likely to come between the back end of this year, 2024, 2025. What the central banks are doing with quantitative easing is printing money to pay the interest on the debt from the previous kind of debt cycle. So every 3.5 years, same as the Bitcoin halving cycle, is this economic cycle driven by government debts and how they roll them every kind of 3.5 years, because they're all 3 to 5 year debts. We're about to come into the period where they have to monetize the pandemic payments, and they were massive. And they can't do it with interest rates where they are now. So what they're hoping is that they can get inflation to undershoot. They are not stupid, the central banks. They obviously know the forward-looking indicators are falling on everything, but they want an inflation undershoot because they need to be able to cut rates low enough that they can refi the debt and then put it onto the balance sheet. So that means, in layman's terms, starting from the back end of this year, the last quarter, let's call it kind of November, December period, there's going to be more cowbell. And cowbell is my kind of tagline for stimulus. That's whether it's the printing of money starts, or that starts then, or cutting of rates, because they need to be able to service the debt. There's $13 trillion of debts that come up for renewal, plus the new debt that they're issuing. So it's an enormous amount for the markets to digest. And the only way of doing it is this, because it just means that they have to issue more debt just to pay the interest. Now, what they have been doing, they have been issuing some of this debt, but they've been doing it like 3-month bills because they don't want to commit themselves to having to pay bloody 5% interest for 5 years. What they want to do is keep it the short term, let the economy collapse or let inflation collapse, cut rates, then they'll roll all the debt out 5 years, between 3, 4, and 5 years. So that's the game in town. They're all doing it, all the central banks.
As Bitcoin and Ethereum continue to dominate the top 2 spots by market cap, Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before.
The world is more complicated than a lot of people have you believe. And these narratives come from people who want the dollar to decline. The dollar's in a structural bull market and has been for quite some time now because of the global debts. So over time, we will see different things take a slice of the dollar market. I think they should be able to trade with each other in their own currencies, and they will do. I think also the rise of cryptocurrencies fits in with that. I think there's a bunch of things. But, we talk about de-dollarization, and on the other side, we see stable coins, the biggest application of crypto. And that's allowing average people to get hold of dollars, right?
Yeah.
It's just a tokenized dollar.
So
nobody really wants to get rid of dollars. I think it's very important what BlackRock have done. Not for the ETF, not for the flows, but the message it sends to the entire financial industry. Again, I know a lot of these people. BlackRock have been involved in crypto for a while now. Because don't forget, he talked about it in the last cycle. Apollo, massive. Goldman, JP Morgan, they're all there. But what we're doing is seeing them come to the surface and say, this is a meaningful technology, and we will not only, before it's like we'll use blockchain for stuff, they're now saying, well, we want to invest in it, we want to allow our clients to invest in it, and we will build out on the infrastructure of it. So if you want the largest applications layer possible, it's that whole finance industry, right? There's like $1 quadrillion of derivatives. They can all go on chain. All of the equity markets, everything can go on chain. So if you want a use case that dwarfs everything, it's the system of money and finance. I think by November, inflation is going to be 2% or less.
Wow.
I think that they have no chance of continuing. So no, I think the data that's been coming out, as you've been pointing out, is very much telling the Fed that they're not going to do any more. And if that continues, which I strongly think it does, then that's game over. And in fact, we're going to be looking at rate cuts. Now, the thing that will accelerate rate cuts is the banks. If those regional banks start running into any banana skins and slipping up, then the game gets really interesting, because then they have to stop QT, they have to start rescuing banks, and then the real game is on.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.